I start with personal taxes. Asking more from those who have more means that the first difficult decision I take on tax is to reduce the threshold at which the 45p rate becomes payable from £150,000 to £125,140. Those earning £150,000 or more will pay just over £1,200 more in tax every year. We're also taking difficult decisions on tax-free allowances. I'm maintaining at current levels the income tax personal allowance, higher rate threshold, main national insurance thresholds and the inheritance tax thresholds for a further 2 years, taking us to April 2028. I have no objection to windfall taxes if they are genuinely about windfall profits caused by unexpected increases in energy prices. But I know the honourable members opposite are getting excited at the talk of windfall taxes. Can I just say that any such tax should be temporary, not deter investment, and recognise the cyclical nature of energy businesses. So, taking account of this, I've decided that from January the 1st until March 28, we will increase the energy profits levy from 25 to 35%. The structure of our energy market also creates windfall profits for low-carbon electricity generation. So from January the 1st, we've decided to introduce a new temporary 45% levy on electricity generators. Together, these measures raise £14 billion next year. This winter, we will stick with their plan to spend £55 billion to help households and businesses with their energy bills, one of the largest support plans in Europe. From April, we'll continue the energy price guarantee for a further 12 months at a higher level of £3,000 per year for the average household. With prices forecast to remain elevated throughout next year, this will mean an average of £500 support for every household in the country. Because the OBR forecast half of all new vehicles will be electric by 2025, to make our motoring tax system fairer, I've decided that from then, electric vehicles will no longer be exempt from vehicle excise duty. Company car tax rates will remain lower for electric vehicles, and I've listened to industry bodies and will limit rate increases to 1 percentage point a year for 3 years from 2025. While I've decided to freeze the employer's NICS threshold until April 2028, we will retain the employment allowance at its new higher level of £5,000. This means 40% of all businesses will pay no NICS at all. The VAT threshold is already more than twice as high as the EU and OECD averages. I will maintain it at that level until March 26. So we'll proceed with the revaluation of business properties from April 23. But I will soften the blow on businesses with a nearly £14 billion tax cut over the next 5 years. Nearly 2/3 of properties will not pay a penny more next year, and thousands of pubs, restaurants and small high street shops will benefit. This will include a new government-funded transitional relief scheme, as called for by the CBI, the British Retail Consortium, the Federation of Small Businesses and others, benefiting around 700,000 businesses. But I am also concerned that we've seen a sharp increase in economically inactive working-age adults of around 630,000 people since the start of the pandemic. Employment levels have yet to return to pre-pandemic levels, which is bad for businesses who cannot fill vacancies and bad for people missing out on the opportunity to do well for themselves and their families. So the Prime Minister has asked the Work and Pensions Secretary to do a thorough review of issues holding back workforce participation to conclude early in the new year. Alongside this, I am also committed to helping people already in work to raise their incomes, progress in work and become financially independent. So we will ask over 600,000 more people on universal credit to meet with a work coach so that they can get the support they need to increase their hours or earnings. Richard Hughes and his team at the OBR today lay out starkly the impact of global headwinds on the UK economy, and I'm enormously grateful to him and his team for their thorough work. The OBR forecasts the UK's inflation rate to be 9.1% this year and 7.4% next year. They confirm that our actions today help inflation to fall sharply from the middle of next year. They also judge that the UK, like other countries, is now in recession. Overall this year, the economy is still forecast to grow by 4.2%. GDP then falls in 2023 by 1.4%, before rising by 1.3%, 2.6% and 2.7% in the following 3 years. The OBR says higher energy prices explain the majority of the downward revision in cumulative growth since March. They also expect a rise in unemployment from 3.6% today to 4.9% in 2024, before falling to 4.1%. Today's decisions mean that over the next 5 years, borrowing is more than halved. This year we're forecast to borrow 7.1% of GDP, or £177 billion. Next year, 5.5% of GDP, or £140 billion. Then by 2027-28, it falls to 2.4% of GDP, or £69 billion. As a result, underlying debt as a percentage of GDP starts to fall from a peak of 97.6% in 2025-6 to 97.3% in 27-28. Two new fiscal rules. The first is that underlying debt must fall as a percentage of GDP by the 5th year of a rolling 5-year period. The second, that public sector borrowing over the same period must be below 3% of GDP. And the plan I'm announcing today meets both rules.